Good morning, good afternoon, good evening, depending on when you're viewing this wonderful video. My name is Beverly Powell with Caldwell Banker Realty, and I am so happy this morning to be able to present my guest to you, Brett Korf. I'm going to introduce you to him in just a moment, but first of all, I want to introduce you to our dynamic engineer, Mrs. Francine Christian Williams of 3T Creation Graphic Designs. She's been a very great help in getting us situated here in this module that we're in. So I want to welcome Francine and thank you for being here and being our engineer.
You're most welcome.
Great, thank you. So now we're going to go ahead and get our program started, get our interview started. I want to introduce this young man to you that I met a few years back, and he's been very instrumental in helping me build my business on the difficult files as well as the not so difficult files and transactions. He is knowledgeable in the lending market for home loans. He's knowledgeable in the market and the overall economic system. And so I want to introduce Vice President of Mortgage Lending, Brett Korf, to you with Guaranteed Rate Affinity Mortgage. Would you welcome him? Welcome, Brett.
Good morning, Beverly. Thank you.
Thank you. Thank you. First of all, I want to say thank you again for allowing me to do this interview with you. Secondly, I would like for you just to take a few moments and if you would share with our audience, a little bit about yourself so that when I'm introducing you to them, they will know you on a little more personal level, your licenses, how long you've been with the company, length of working in mortgage lending, etc.
Yes, of course, naturally. Wow, I've been lending for a long time, a little bit over 30 years. I've been in the business, which has been a roller coaster ride, to say the least. Right out of college, I started working for a finance company and have been in the business ever since. I work for Guaranteed Rate Affinity. We're one of the largest mortgage lenders in the United States. 850 offices nationwide between Guaranteed Rate Affinity and Guaranteed Rate companies, two different divisions of our company. So we're nationwide, and I have all my licensing, MLS licensing, which is required for all loan officers. It's right there on my right shoulder, and it's been a privilege to be in this business and roll with the changes, and I'm glad that I can be here today.
Well, I'm glad to have you here, and I'm sure my guests are happy to have you here as well. Can you give us a little bit of an overview about the California market and how strong it is right now, and if there's any Federal Reserve decisions that are impacting our market?
Yeah, so the Federal Reserve right now's main goal is to keep inflation at a target level of somewhere between 2 and 3%. Right now, we're running a little over 8%. And so, what the Federal Reserve is doing is the tool that they have to try and keep inflation down is to raise what's called the federal funds rate. And they've been doing that actively over the last year. And they're going to continue to do that going forward to essentially slow the economy down so inflation starts to go down as well. And what that does to interest rates is when they raise the federal funds rate, it costs banks more to borrow the money from the government, which then in turn they pass on to the borrowers in the forms of higher rates on credit cards and lines of credit and those types of things. And then it indirectly affects mortgage rates. And that's why we've seen mortgage rates increase dramatically over the last 9 months.
Hmm.
Yeah.
Thank you. Do you think that that information has returned us or help us return to a more stable, accessible real estate market in California?
Well, it's done two things. Naturally, the higher interest rates do affect what somebody's getting and what they're paying on their mortgage payment, but it's also increased inventory in the market. That's the biggest thing that I've seen is the market has gotten more accessible to first-time home buyers and to people that were out there looking last year that couldn't find a home, and maybe they are perfectly they're perfectly qualified to purchase. They just couldn't get their offers accepted, or they were just the competition was too great. And so with the rates going up, it's actually increased inventory, and I think it's made it more accessible to all buyers right now because there's
Mhm.
more inventory.
Absolutely. So, can you explain for us, Brett, why it may still be a good time to purchase a home right now in today's market? I know some people are struggling with whether we should buy a home right now or should we wait until 2023, 24, and rather than holding off, why is it a good time for us to purchase a home now?
Well, I think it goes back to inventory and demand. The inventory is now high enough where people can have choices on a home. They're not rushing to buy the first home that they see, so you can have the opportunity to shop and to find that perfect home in that perfect neighborhood and in that area, that geographic area maybe that you want to be in. Um, but it also the market is still continue to the appreciation is expected to be still continuing, and so if you can buy now, what they always say is the best time to buy is right now,
Right
because next year those homes that you're looking at are going to be more expensive, and going forward that's going to continue. The builders haven't kept up with demand for at
now, not
least
at all.
15 years.
Yes.
And there's graphs, and there's a ton of data that support the fact that we haven't built enough homes in the last 10 to 15 years to meet the population
Hmm.
increases, and so it's going to continue to increase to it still continue to have pressure on demand, and so it's going to keep prices going up. The inventory, um, they're saying that they're going to the prices are going to continue at least another 4% this year, and probably more next year.
Okay, that's great. I hope that helps the buyers that are sitting on the fence. I hope it gives you some clarity. And if you need further information, you can contact Brett or I, and we'll be more than happy to go in a little bit more detail with you about that. But I want to move on. I know our time is valuable here, but I wanted to ask you just on what you've shared with us, and then the rate and then the percentage going up about 4%. Do you see any major risks in a buyer purchasing a home in 2022?
No, I mean, we're still historically low on interest rates. I mean, a first-time home buyer using FHA, we're still in the mid fives. VA is actually a little bit lower than that, and conventional is touching high fives, low sixes, and so historically that's still very very low. And to be able to get into a mortgage and into a home now at those rates is still a fantastic opportunity.
Hmm.
In addition, the interest that you pay on that loan is tax deductible, so a good percentage of that will come back to you in tax refunds at the end of the year. So your actual effective interest rate is lower than what you're truly paying on that loan. Um, the other thing that might come into play is as the market changes and moves during times going forward, we may see rates come down in the future, and there is expectations of that down the road. If you can get into your dream home now at a good rate, there's a good chance that you may be able to refinance that loan a year or two down the road and lower those payments, and then you have the best of everything.
I don't want to put you on the spot, and thank you for that response. That's a good response, especially with the tax write-off and things of that nature. But I want to just kind of throw this in because it came into my thought process as you were sharing with us. Is there how do I want to word it, phrase it? How, well, I can't remember what I was going to ask you, so we're going to move on. That's where I'm at. I can't get that question back, but let's
We'll
move
come
on.
we'll come back to it.
Yeah, we'll come back to it. So, how do you determine what type of mortgage is best for a purchase for a particular buyer? What's the
Well,
criteria?
yeah, and everybody's situation is different. Every client I talk to has certain goals of where what they where they want to be and what price range they're looking at, and certainly there's going to be limitations for qualifying for those programs. So my job is to find the best program for somebody based on how much they have for a down payment, what their credit profile looks like, what their long term and short term goals are,
Mhm.
and then I give them those options to choose from. So if somebody were to have let's say they had a lot of money saved for a down payment, they'd be looking at a different program than somebody that maybe wanted to keep the down payment as low as possible. So there's what's great about the market is there's so many options available for financing that it's important to have somebody that knows what they're doing to direct and give them that information.
That's why I was so anxious and excited to do this interview with you because I know you know what you're doing. And I know that when I refer buyers to you, they're getting quality information, quality service, and they're getting a certain level of expertise that you may not find out in the marketplace. So I'm really excited about that. And then you also helped me remember the question I was going to ask.
Okay.
It's off record for us, and I wrote it down so I wouldn't forget when you got finished with your answer. Um, do you have any thoughts about the nation or the world being in a recession right now? I know we hear a lot about recession, and recession is coming if it's not there already. Do you have any thoughts on that? I know that's off script, but if you do, yes. If you don't, I understand.
Well, I was just on a podcast with one of the experts in the industry, and it was interesting to see. He was talking about that very subject, and he said every single recession that we've had, homes prices have increased. So he said, now purchasing a home during a recession isn't a risk. It's actually a good thing to do, because if you can save a few, if you can buy now and not wait, then you're going to save money on that purchase. In addition, going back to kind of what I alluded to, is during a recession, once we're into a recession officially, I guess,
Hmm.
um, the Fed's going to have to start making changes in how they handle the market, and that's why there's a good indication that we're going to have lower rates next year, because the Fed's going to lower interest rates to pull us out of the recession, or have the economy get back on track, and that gives anybody buying a home right now an opportunity to refinance in the very near future.
And reduce that interest rate, thus reducing their mortgage payment, their monthly payment. Excellent, excellent. So, how much down payment is needed to purchase? And are there any no money down programs, no closing cost programs available to buyers, potential buyers?
So there's down payment assistance programs available. They're government-backed programs. They do provide down payment assistance and closing cost assistance. Typically, you're still going to need to bring in some funds to cover closing costs. They don't cover everything, but they do provide assistance. So if somebody has some money saved, they don't need to wait until they have a 5% or a 20% down payment. I still get people coming to me think that they need to have a lot more money than they really do, and and even if they don't have quite enough saved at this very moment to and um, then I can give them a path to get to where they need to be as far as how much savings they need to have. Those funds can also come from gifts. So maybe they talk to family members, or maybe they look at investments that they have elsewhere, and they can pull those things together to get them to where they need to be.
That's one of the things I appreciate working with you, because you do help people with a path, directing them as to, if they're not quite ready in the moment, that there's a way for you to get there if you follow, if you plan the work and follow the plan that you've and do the work that on the plan that you've worked out for yourselves with you. Then they're able to realize that dream, maybe 6, 7 months or 12 months down the road. So
Yep.
that's really good. I appreciate that. I appreciate that service. What is the difference between a hard or a soft credit report?
So a hard credit report is when we actually pull a credit report, and so it gives us all the information we need to get somebody pre-approved or approved for financing. A soft credit pull is still a credit inquiry, but it doesn't show as an inquiry on their credit report. So the real difference between the two reports is how it shows up on your credit file. A hard pull might drop your credit score a point or two, or maybe 5 points, depending on your credit profile. A soft pull won't affect your credit scores at all because it doesn't show as an inquiry. So what we've done, and this is actually something new, we've actually started offering soft credit pulls for maybe somebody that's not in a position to buy right now, and we can still look at the credit but not actually have a credit pull show up on their credit report.
Excellent. I think that's good for people to understand that, because I think they get it a little confused that every time you're tapping into that credit, that it's going to be pulling on that score and pulling it down. So what types of loans are available to potential buyers? I know there are different levels of buyers based on your credit report and the cash flow that you have and income coming in. But what different types of loans are available? If you
Well,
can
the
just.
most common programs are what they call conventional financing. These are Fannie Mae and Freddie Mac government-based backed loans. They'll finance up to 97% loan to value, meaning you can do a 3% down payment if you're a first-time home buyer. They offer the full array of programs, from 15-year fixed to 30-year fixed, and so that's the most common program that's used. But there's also government programs like VA, which is a fantastic program for active and retired military. That's a zero down payment program, and a lot of times we can get closing costs covered with rebates. So that program is really a truly no down payment, no closing cost program if they're eligible. There's also FHA, which is a very good program, government backed again. It's a good first time home buyer program because it allows lower credit scores, higher limitations on the debt to income ratio. So it's a little bit more flexible than some of the other programs. And then there's USDA, which is a rural program that sometimes works in out in the East counties and in rural areas. There's no down payment on that program as well. So there's all kinds of options. We also have bank statement programs, stated income programs. We have what's called investor cash flow programs, where they can purchase a property and use the rents that they've been collecting from the investment property. As long as they cover the mortgage payment, then they'll qualify for the program. There's all kinds of creative programs out there right now that didn't used to exist just a year or two ago.
That's excellent, and that's kind of what I wanted to bring out for something. There's a smorgasbord for everyone.
Yeah.
And the higher your income, the more money you have in the bank, the more financially stable you are. It's a little bit a different route for you to take and proceed in. But there's a home for everyone and an opportunity for everyone with the different programs and the different opportunities that we have. So tell us about mortgage insurance and when it comes into play.
So mortgage insurance is insurance to protect the lender against losses on a loan. So if somebody is putting less than 20% down when they're buying a home, then your financing will obviously need to be above 80%. So let's say somebody's putting 10% down, then they need a loan for 90% of the value of the home. We would need to have what's called mortgage insurance on that loan to make sure that if the borrower were not able to make those payments, that the insurance would cover any losses that the government may incur if that home went into foreclosure. So the mortgage insurance costs can vary depending on how much they're putting down, what their credit scores are, what type of property it is. So it can be as little as $30 a month, and it can be as high as $300 a month. It just varies on the situation, but it's not insurance for the borrower; it's insurance for the lender.
Lender, yes,
Yeah.
absolutely.
And the reason why it's there to keep the programs going and to keep them solvent. So it's really a benefit, even though you don't, it's not insurance for you, but it's a benefit to you because it keeps the programs solvent and protected against any losses.
Sure, absolutely. I also think that we need to cover what determines the mortgage rate for a particular buyer. I know it's kind of been intertwined in what you've been sharing so far, but just be more specific on that.
Yeah. So mortgage rates are based on risk. So every file has a different risk factor based on credit scores, down payment amount, property type, and what we call debt to income ratios. So the system takes all that into consideration and says, okay, this loan is more riskier than this loan, and that's what determines the pricing. So one borrower with a 700 credit score is going to get a little bit higher rate than somebody with a 740 credit score, simply because the person with the higher credit score is judged as a less risk to the programs, and so that's what determines pricing. So when I talk to clients, I talk to them about all these things, and I let them know, if their credit scores are a little low, or not as high as they could be, I can manipulate credit reports and say, if you pay this account down, or if you pay this account off, or if you do this or do that, you can bring your credit scores up. Or if you're looking at a certain price point or certain range, and you have a little bit more money down, your interest rate's going to be a little bit better if you can put 10% down instead of 5% down. So those types of things all come into play.
Okay, what about buying down your rate?
So that's something that has been very forefront lately, because the way the market is set up right now, buying down the interest rate gets you, usually can drop your interest rate from 1/4 to 3/8 from where it would be if you weren't paying any points. And what points are is a cost to get a lower interest rate. It's a discount fee. 1 point is 1% of the loan amount. So if you're borrowing $400,000 and you want to buy the interest rate down, let's say from 5.5 to 5.25, you could pay a point or $4,000 as part of the cost.
Mm-hmm.
You get the lower interest rate and the lower payment. And everybody's situation is a little bit different. Sometimes it makes sense to buy down that rate and get that lower payment. And sometimes people will choose to go the other way and pay a little bit higher interest rate and not bring in as much money at closing. So it really just depends on everybody's situation.
Absolutely.
And like I said, the market is so compressed right now that buying down the rate is more advantageous than it used to be.
As I think it's good that we know that. And so it's good to hear you say that. Your integrity, your knowledge, your wisdom, everything is coming forth right now. And I really appreciate that. And I'm so glad that we're a team and you're part of the team that I'm working on and trying to help our community be homeowners and be money smart with their homes and in the manner in which they purchase it. So, right now, since we're almost winding down, just give me that one thing, give us that one thing that sets guaranteed rate affinity mortgage apart from everyone else. Why wouldn't I go to my bank, Chase Bank or any other bank, and get a loan? What sets us apart there?
Well, I think it's customer service and experience and knowledge.
Yes.
I get that question, or I get clients that come to me and they're frustrated because they walked into a retail bank and they're not talking to somebody that has experience. And they don't have the same experience level, but they're not getting the same service as well. I'm available at all times. I work on weekends. I work on evenings. I'm available to talk to anybody at any time. And I understand that people work just like me, and maybe the best times to talk is on weekends.
Right.
That's fantastic. And also, I'm there. If they're out looking at homes on a Saturday and they need a pre-approval letter for their offer, I can get that to you, or to them very quickly. That same day, so they can get an offer in, and I can
Mhm.
I'll talk to the listing agents, help to get their offers accepted. A lot of things that you're not going to get when you're working with a retail bank, and when you're working with a lot of other companies. Um, I think, my 30 years of experience, I think I've seen a lot, and so it really is valuable to me, but also valuable to you and my other agents that I work with, to have the ability to foresee potential issues,
Absolutely.
and to be thinking ahead instead of trying to react to things. And so that's what I spend a lot of time doing, is making sure people are ready and prepared, and once we're moving forward, then we're not running into any particular issues that a lot of people do when they work with less experienced
Absolutely.
agents.
I hope that people can hear from what you just shared how detailed the service is. And that's the one thing I like about it from our last customer that we worked together on.
Yeah.
You were very detailed with her as to what she could and could not do. And then you put it all in writing for her so that there was no misunderstanding. And she really appreciated that. So as we wind down again, we have just a couple more questions. Tell us what people need. What are the documents that they need to get the process going?
Generally, the first steps would be looking at income and credit. Those are super important aspects of being able to qualify and determine where they fit. So pay stubs. If somebody's W-2 employee, then we would need pay stubs and W-2s, as well as their last 2 years of tax returns, and then just a bank statement to verify what kind of funds they have saved for a down payment.
How many
And
pay stubs and bank statements would you need? Like 2 months, 3 months?
so two most recent pay stubs,
Hmm.
and the two recent years of W-2s and tax returns.
And tax returns. Okay.
So the reason for that is it gives us a history, because sometimes when we look at income, we have to average it over a 2-year period. Sometimes it doesn't have to be averaged. So if I have all the documentation right up front, I can tell you with certainty what you qualify for now, and so that way there isn't any potential issues later on.
Up front.
Um, and then if somebody's self-employed, then the two most recent years of personal tax returns, and if they file a business tax return, then the most two recent years of those business tax returns. And then I can work through, usually within the same day or within 24 hours. I can have the documents reviewed, everything worked up, and let the client know exactly where we sit and what the numbers look like, and so they can move quickly if they need to.
Just for FYI purposes, we know the interest rate can change and fluctuate throughout the day. For this morning, what is our interest rate for this morning? Our par
So
rate?
that's a tough question because everybody's different.
Yeah,
But right now, with a 1 point buy down, we're looking at a 30-year fixed, about 5.8%, somewhere in that range. High fives, and then for VA, we're looking in the low fives, and FHA in the mid fives. And like I said, that varies depending on each person's profile,
right.
but it's still very good historically. If we're still in the fives, and the expectation is we're not expected to see them rise too much further than where we're already at right now. But certainly the sooner the better that they can get the process started and get
In
pre-approved is
position.
good.
Yeah.
One other thing I wanted to bring up is regarding rates.
Mm-hmm.
We will lock a customer while they shop for a home, and
Good
a
point.
lot of a lot of lenders, especially brokers and retail banks, will not do that for a client. So if their concern is interest rates going up, which is a lot of people's concerns, then I can lock somebody up to 90 days out while they shop for a home. So if they get pre-approved today, I can lock them today. They know exactly what they're going to get for an interest rate and what they qualify for. And then they can spend, 30, 60 days shopping for a home and know that they're, exactly what terms they're going to get on the financing.
It's really good to know.
Yeah.
Yeah, thank you so much. Did you have any closing remarks you want to add there? You just added one about locking that rate, which is really good. We needed to know that. That's good. Did
Yeah.
you
I,
have anything else?
I, I think the sooner that somebody gets started on the path, whether they don't think they're ready now, or not, I think the sooner they talk to a professional, and they talk to me and talk to you, they can get a picture of where they need to be, and they can start on that path. And I think that's the greatest thing to do with somebody. I have clients that come back to me 2 years later and they say, okay, we're ready. We did everything you told us. So it's
And
nice.
sometimes it does take that long. We
It,
worked
it,
with one client for 3 years before he was in position to actually purchase the home.
yeah. I
And
mean,
so,
it's
yeah,
just a goal. Sometimes it takes longer to reach that goal, but at least you're on the right path.
on the right path with the right team to help you do that. And so
Absolutely.
I just want to thank you again, Brett, for taking time out of your day to share with me and my audience and my client base. I hope this is going to be an absolute blessing for everyone that hears this. We're going to be doing some new segments with escrow and title so that you can get an understanding about those entities, and because they play a major part in the real estate process and buying a home. And of course, you have Brett and I here for any questions that you have asked after this. So, Brett, have a great day on purpose because you can. And I thank you so much for the opportunity to share and collaborate together as partners.
Beverly, thank you so much. I really enjoyed being here, and certainly look forward to our next client together.
Absolutely. And I want to thank our engineer, Francine Christian Williams from 3T Creation Graphic Design. Thank you. Bye-bye.